Yo, people, how we doing? Let's get this going. Well, hey, we're here, we're live. A little bit later than I had planned because I had a load of stuff to get prepared. And let's just get straight into it, shall we? This stream is now partnered with Blofin. So if you bring over your CEX trade into Blofin using my link, you can receive up to $1,000 in deposit bonuses. You'll get up to 150x leverage trading. There's no KYC to sign up. And you'll also get access to my new private Telegram where I give market reviews and trade plans every day. So the link is in the comments and the description below. And this stream is also partnered with HyroTrader, which is a native crypto prop firm. For 10% off all challenge fees, use the code TraderMatt at checkout. And I'll also get you into my Discord channel where I can help you through the challenge phase. So the link is below for that too. Thank you very much for listening to that. How are you all doing? I guess we're all live, up and running. It seems all good on my end. Who's here? Let me know. So tonight we are going to talk a few things. I've called this video Bitcoin has given off summer 2018 vibes. And we're going to look into that because it looks very, very similar and feels very similar with like lack of volume and just like the overall sentiment. So what we're going to do is look into that. We're going to cover Bitcoin, Ethereum, Solana, and Hyperliquid as I do every week, and give off trade plans for the week ahead and just kind of see if there are any at the moment, because I'm not really rushing into anything. Although just before I jumped on stream, I could see that everything's kind of moving up into areas I'd marked and posted about on X. And then we're going to do chat requests and Q&A if there's anyone here for it. And then we are going to look at kind of a technical section about breakout candles, like examples of breakout candles, just to familiarize yourself with how like a genuine breakout candle may look like, because I think at some point soon we're going to get one on the lower timeframes, or the medium timeframes, I should say. And then the last subject that I want to talk about is it's a bit more of a, I guess, kind of psychological lifestyle subject, I guess. Yeah, I've recently been going through a bit of a transition with trading from swing trading, from day trading to swing trading, and going through all kinds of challenges with it. And after I did a live stream doing some day trading for my subscribers on X on Thursday, and then I'd done it a couple of weeks before, I realized that trading on the lower time frames for just like a couple of hours, I really miss it, and I've been doing quite well with it. I think I'm up like 4.6R or something across the two streams with 0 losses, which I know is like just one thing, but it's just making me rethink what's important, or like how I should be trading, in my opinion, and what's going to be best for me. And hopefully it can inspire you to kind of look at things differently as well, to find something that more aligns with your style of trading and your lifestyle. And yeah, we'll take it from there. I'm not sure how many people are going to jump onto this because we are midsummer. We're in a bunch of chop and everyone is bored. I've barely even posted just because the day has been quite boring. Even though it's moved up, I just feel like I'm a little bit checked out of things until the higher time frame moves, or maybe because it's just Monday and I can't be bothered to get into it. So here we go. Chapter 1 is on Bitcoin, and what we can see today is it's moved up. Let's look at the grander scheme of things, just to refamiliarize ourselves with where we are and what's actually going on. So we had this big range low down here on the daily time frame, and then I've used the next low as the range low, and the first retrace after creating that low, after it took out this previous low, as the range high. And it's spending a fair bit of time up at this range high, and every time it comes down back into the range, it's not following through. So there's not a huge amount of appetite on this front for things to actually move. Like if it was going to go, like it should have gone today, really, because you could see over the course of the weekend and later part of last week, it was dropping lower and lower. But for it to be a convincing drop, we needed a big candle like this one, like here or here or there, if it was going to go. But you can see all it's done is just really small candles into this area, very low volume, and then seeing this retrace back up is not really that surprising, considering that you tend to get these types of moves after you get a little staggered bit of price action like that. So when it didn't take out the lows and started pumping up this morning, it gave, well, yesterday, I should say. Oh, no, it was this morning, wasn't it? Yeah, 1 a.m. When it rounded off like this, we have the drop, and then it rounds off. It should be going, because you've got a downtrend and you've got that kind of curved, like falling over price action, and at the low it should be dropping, right? That's what the trend suggests. But in this case, and as the case you get for reversals, if that candle is going to wipe out all of that price action when it should be going, it's gonna trend back up. So the question is, where's it going to trend back up to? And just in the same way that we had this demand zone, which was key, right? This is where we have a downtrend. Let's just do it like that. And then in the same vein here, where price should be dropping, because it had 1, 2, 3 attempts to go, where it should be dropping on the third attempt, it reverses. Same thing happens here, right? And then it compresses up a couple of times, and it doesn't impulse up, and ends up retracing all the way back down to the origin of that uptrend. So we have a key level here, which is now where Bitcoin is coming up to, and we'll refine it on the lower time frames. But this is where price creates a sell-off for this compression opposite of this, and it tries to impulse down twice and retraces, so it's coming back up to the origin of that sell-off. In much the same way as at this origin here, because it failed to impulse, it comes all the way back down. In this case, it gets faked and then moves back up. That's because we're in a range. So I'm not getting too excited by things just yet. I don't think that's really the interesting level. I think the level above is, which we'll talk about on lower time frame. So on the hourly time frame, we can see that range up here. It's not the greatest, but it's where price goes sideways in a clear kind of area of value disagreement, and then it breaks to the downside and then creates this decision point, which is where the sell-off kicks in to break this low and then this low and ultimately put in this low. And you can see this itself on this time frame where we get more candles. This is all a part of the compression. So now it's pushing up and it's going to go right to the origin of it. Is that the origin of it? Let's look on M15. We can say that really the origin is probably up here, because all of these moves, this is a reaction to here, which is a reaction to here, which is a reaction to here, which is a reaction to here, is kind of, there's no real clean impulse away that has not yet been retested, meaning that it's probably going to go a lot deeper. So you had a really clear impulse here, and then you can see the reaction was basically a very nice SR flip. So that gives like a difference in the structure, whereas what we have now, this is all part of that same structure, which essentially leads us back up to the range high of about 65,351. So now it's going to be a case of waiting to see where this move exhausts and can you ride it, or are you going to look more in favor of shorts, especially back up at the highs. I would say on the hourly time frame, we've got a few key areas. You've got this first low where you could make a case of this is where the sell-off created this low, and when price is chopping around over the weekend, you can make a case that it needs to come back, like it just needs to kind of clean the market up with this crap and find some liquidity. You could make a case that it will come to this high and it should drop. But it doesn't. It changes things over the weekend. And we have this area here, which is where the buying took place to break that high. It retests it once, higher high, again, higher low, and then another higher high. And it kind of zips up from this point. So this is a key area. Now it's a case of, can this hold? Because if we get back below 63.3K, then it is going to look like this is topped. So it's probably, I mean, it's going to be very likely in this current environment, whether it's in the coming days or the coming weeks, that it comes back down to this point, and then it kind of tests the market's resolve. Is it going to be bullish after all, or is it going to break? And if it breaks down at that point, then you'd really have to favor, considering how many times it had tried to go before, that this might be the one that sends it down to the range low at about 59K. You'd favor that, basically. But again, then if it doesn't, and then it comes back up, we're just ranging, and it's frustrating. But you'd fancy, based on what we're seeing, that it would continue down that way. But considering the conditions, I wouldn't be sitting here like waiting for it with high risk. I'd just be kind of dialing it all down to get a few more markers that we're going to trade, like we're going to trend. But even exhaustion now up at these highs is going to be good RR for shorts, whether it's within this range or it comes up, takes the range high out, and then puts in a top pattern. But it could also, from this point, push up and give us a signal that it's actually quite strong, and we're going to go even higher, maybe up to 68K, which is the end of all of this current price action. So it's either going to continue here all the way up to 68K, or it's going to just kind of find some exhaustion and Bart Simpson back down. So really, we're going to just have to wait and see, because it's done the trend. If you did catch the trend, then kudos to you. If you didn't catch the trend, then the ways of getting in, whether you're long biased or short biased, is now seeing that we're coming back up to above that higher time frame range, and we have sitting on that particular key area another little range that has formed where we can get our map for tomorrow. So the low is at 63,933 and the high is at 64,164. So that'll be a first real test of how strong this trend is, because if it's strong, it should really be holding these continuation levels up. At the worst, like either, ooh, big move there, either the origin there or any of these levels, really, it should be holding if it's strong. But I would say the first danger sign would be that it now breaks through this level, this low at 63.933, and then it seems like it should move down to 63.3. Or, considering now we are starting to look quite strong, you'd like to see it come down, hold the level, put in a series of higher highs and higher lows, or maybe some sort of move like this, where this high is like this high, for example, and then it retraces down to the key level, and then you might get a bounce like that. But you want to see essentially this kind of price action where it looks like it's going to start reacting strong, surviving the retraces and then looking to get long up to the range high of about 65.3 if it's that strong. But this would be also the level for me where I would say on an intraday basis, I'd start looking for shorts on the break of that, just because on the medium time frame, this high at 65.4 is still in control. We're still bearish biased underneath that. So I would favor this move to start exhausting and then look to short it back down rather than longing. But that's, entirely your call, whether you're bullish, bearish. But those are kind of both situations for that. All right, we've got some people in on YouTube. Marlowe's here. Mario Lender. This range is hella boring, but your streams, Matt, they never get boring. Thank you, as usual, for showing up. Thank you. Appreciate that. Akash. Matt, I watched your stream with Uncle Will. That was a very good stream. I learned a lot. Thank you for that. Thank you for coming. Thank you for watching it and absorbing it. It's all down to you. We will do another one, me and Will, at some point. I don't know if I can get X chat up before I move on to Ethereum. Bear with me a second. I'm just going to see if I can get this up. Yes, we do have some chat on X. Tate, glad I've been able to catch this. Always brilliant to see you. Thanks, man. Thank you for joining. I'm glad. Right, so let's move on to Ethereum. Now we've all said hello. But like I said, I reckon a lot of people were probably getting a little bit bored, as we all are, and not showing up. Right, Ethereum. Got way too many windows open. There we go. Right, let's remind ourselves where we are. My head's screwed back on now after that little foray away into checking the chats. Right, I'll make some of this. It shocked me a little bit because I've added some, what do you call them, salts into it. I've got the chat box all fucked up. Got too much going on. That's the one. There we go. Should be there. I'm so sorry for those watching. I just had to move the chat thing because it was... I've made it all nice and clean now. You should see, obviously, that I've changed the design. I did that today, so no more overlay of the charts. Everything should be nice and clean. And got myself a nice little lo-fi logo sorted as well, which looks like a lot of logos from back in the day, or kind of artwork from back in the day, which is what I like about it. But does it look too AI generated? I feel like it might, and I might need to change. But it actually matches the style pretty spot on from what I was looking for. If you looked at channels like Chill Hop Summer 2018 is a pertinent one, or Winter 2018 was also a good one. And it matches this kind of art style, which is what I was looking for. So here we are on the daily time frame on Ethereum. And we've got this extreme here, which is where the sell-off created the lows down into 1400, 1500. And that's yet to be tested, which makes me think it will be, because normally you get these really key areas tested before new lows or a continuation. But the way that Ethereum is, like, I'm still bearish under 2150, and especially so below this high here. But again, like, we've got price moving sideways and it's still kind of just stuck within a range and not really doing much. And that range is sitting below the resistance point. So if I just mark this current daily time frame range, you'll see things a lot cleaner. And I'll use the candle body rather than the wick, just to keep things a little bit neater, because otherwise we've got a pretty wide range. But if I use the bodies, you can see how things kind of pivot around it. So let's read it. It comes down, bounces as a high, comes back down to test the low, and then creates a higher high, and hasn't yet moved back to the area of liquidity where the sell-off created that low, which is where we might have more sell orders to send us back lower. And then just below that first key area, and it's kind of a little bit of compression like so, and then impulses down. It's going to move either to that lower side of it or the higher side of it, which is where the origin of the entire sell-off came from. But it has started ranging just below resistance. I wouldn't say in a particularly bullish way, but I also wouldn't say in a particularly bearish way. So a number of things could happen. But what I would expect is some kind of spike into that 2025 area, and then maybe a drop like that if it's going to move lower. But the way it's so sideways, it's just hard to call, because it could come straight back down like that. It's very crap to see it, to read it, like compared to this where it's all kind of pointing to the direction it wants to go. This is just going very, very flat. So even if we've got a green candle here, we're in this exact zone last week. We're not creating higher highs. We're still sitting under overhead resistance. We're not building up like a big strong move organically where you can kind of feel that pressure building. You can feel the buy orders in the market. It's just kind of ticking along, and then it's almost like an algo has just gone boop like that, and those things tend to come back down quite easily. So it's just like shit price action. So I'm not convinced either way, but I'm not really looking or advising anyone, particularly if you looked at this, to short it unless you get more likely a break below the low, or you get an impulse into one of these highs and then you start looking for reversal patterns there. I think that's the better play, because I still think things want to come down. I just, if I've got Pico bottom of the market in, I think it looks a little bit different, especially with like not just the bottom of the market, but the type of trend that we're in as well. But I wouldn't be surprised if that target is only like 1500, 1400, because it does look like we have bottomed around here at about 70 to 80% down from the highs. So I don't want to fight it all the way down to 1200. I'm not as convinced on that as I am like Bitcoin going back down to 50K. But the way I'm looking at this now is just there's nothing really to trade. Even on the hourly time frame, you've just got like really clear ranges that are just ranging on top of each other. Like this. But they're not even going anywhere. Like, it's just extremely difficult. Even though it's go between things, right? It's just, there's no real clean trend away. There's no real like obvious swing to trade, which makes it easy to predict to short the highs and long the lows, but it's not really going too far to be able to manage risk properly. I mean, you could probably have gotten this level on the break today, would have been quite nice. As you can see, it breaks out of this consolidated zone, comes up, ranges, and you could probably got it in there or here, but I wouldn't trust it. It doesn't just come straight back down. So I don't really advise looking at Ethereum at the moment, especially on the lower time frames. But on the higher time frames, I'd say like we're looking like gearing up for something, and it might be a break out of this range up into about 2025. But again, I would probably favor it coming back down if one of these two supply zones is tested. and Bitcoin looks pretty bearish still. So I think when Bitcoin finally drops, then it's going to drag this down anyway. So yeah, that's kind of my view on Ethereum. I wouldn't really want to be getting involved just yet. Some personal view there. It's up to you what you do in it. Okay, and then here we have Solana on on the daily time frame, and again, just using this overall range from February as a map, we can see that it has broken through it, retested it, tried to drop down. So I imagine if it's going to actually drop down, it's going to come even deeper back up into this range towards that 88 level, which is where the big sell-off actually happened to create the new low. So in the same way that I was just talking about things on Ethereum, was it Ethereum? Sorry, Bitcoin. We kind of want to move back to the edge of the big swings to load back up to continue to move, or see those levels break and then start a new trend to the upside. That's kind of where we're at with things. And that level for me is around about the 86 to 88 mark currently. And I really felt as if this has had a lot of time to go and drop. So it's making me feel like when we get a higher high, we're going to trend back up. It would still be a retrace in the overall context of the entire picture. But if we now get a higher high on the daily time frame, there's no reason to say it won't just trend up for September, or at least have a big move in September before another big move to the downside. But who knows? We're not going to do Mystic Meg predictions, right? So let's see how it moves at these highs. And if we look down on the lower time frames, we can see again, we've just got a nice clean range sitting on the bottom of the previous range low. So it's kind of using that as resistance. So you can see if we use this higher range low as the resistance, it's tapped it, and then it has created a lower low or a series of lower lows. With my bearish hat on, I would say that if it comes up, puts in a lower high, or takes out the high, and then eventually comes back down below this 75 level, I would say that it's going to trend down to about 72. And then it depends what happens at this point. But that's kind of my higher time frame trade idea I have. I'm still waiting now for essentially this level to get broken. And it's been tested 3 times, and we saw what happened with Bitcoin with that third move, right? It tried to go 3 times and then put up this entire swing where we're at now. So I want to see that low break and then get the idea that it's going to trend down, or look for a reversal somewhere around the highs to short back down and anticipate that when this gets tested again, it is going to break after we've tested it so many times, and then follow through to the downside. But at the moment, it's still very choppy. It's got clean levels. Like this here is the extreme of where a sell-off kicked in to create new lows to come down to this demand. So the level that we're currently at is where the buying took place to break the area that was holding us down, and then also create a higher high. So I've been saying to my subscribers as well, when you can subscribe on X, or you can sign up to Blofin using my link, and I'll get you in onto the private Telegram. But I've been saying to them, we don't really want to look for shorts here until this level is broken, and it still hasn't had a close below it. So we're not rushing into things, but we're building very, very slowly, and we need to see a little bit more price action develop and a little bit of volume to kick in as well. We need to see that. But I wouldn't be surprised to see if it actually trends to the upside, maybe comes right to the edge of this overall compression and starts trending up there. So it'll be interesting to see. I need to keep that on actually. It'll be interesting to see what happens on the lower timeframes tomorrow, whether we end up holding this or we lose the lows of 75.13, which is then where I'd say we're probably going to end up breaking the next low, which was the one that was set over the weekend. So very key moments in the charts coming. We're at that range low as well. So I'd say if it starts holding this point, 75.2, and breaking to the upside, we're looking for a trend up to the range high. I'd say that's probably on the cards, and you can look down on lower time frames for that as an entry. But otherwise, I'm still looking at this on this time frame as a break of the demand, because we've got a nice strong close below it. And that could be our clue. And I've been saying as well, we want to get a key level form, which is where what we have here, we have a decision point. We have a decision was made here from the selling to come down and break this low. And on a retest of it, we would expect it to send it back down. So now we're just waiting for the signs of what it wants to do, whether that is to come down back below the lows of the supply zone, put in a lower low, a lower high, and a lower low. And that could be a very good sign that we're actually going to drop from here. The opposite is true for longs, where if it holds these lows and then starts creating a series of lower highs and lower highs and higher highs, then we can look to start pushing it up. But we're at a very key point in the market now, and it's just a case of whether we're going to get the volume or we're going to just keep chopping. But I think we're going to get a resolution to this at some point soon. It might be this week, but it should be happening at some point. Incredibly low volume on all the majors as well, from what I'm seeing. Hard to take any real positions in the chop. Yeah, there's like hardly any volatility. It's tough, very, very tough. Diggs, hey, what's up? What's up with you, bro? We got usually 40-year-old degens here. Hello. So your thoughts on this trend line break, says Akash. What is that? Could you let me know? Do you guys like the new overlay? I want feedback on it, damn it. All right, let's look into Hyperliquid. And we can see, let's do the daily time frame just to get our map. Yeah, so this is the previous all-time high. We come back to it and we create a continuation pattern, tests it, puts in a higher high, and then has come all the way back down, very staggered, and then has created a lower low. So technically we have bears in control, or attempting to take control, because this is the area now at 63 where the sell-off kicked in after this big impulse to create the new low. This is the origin of it, or maybe where we're at now. So if we look down on H4, we can see really we had a range that had formed here, where price drops, retraces up, comes back down to try and go, comes back into the high of the range, and then creates a lower low, sends it down. So from this point, this is where instead of pushing up, continuing the trend, we have a sell-off that kicks in and creates all of this, and we can see price then reacts to it and then creates a new low. So we know this is a key area, and then we have the key area up here, which is basically the fake out high of this range and the top of this entire swing. So if it's bearish, I think it's going to push up because we've kind of reclaimed that range low. and I think it's going to at least head up to the range high of about $60, but maybe even higher into the swing. And then it's got an interesting thing to make. It's either going to range and drop back down, or it's going to reclaim above it with a higher high and then hold it and then trend up. So that's a very key level at $63. Makes me think we want to go for it, but if we can't, and if we start reversing below it and now creating a lower low back below this range low of about $58, I would say we're going to trend to the downside. So we're coming up to a very key level, basically. I'd be looking for this to range. It's doing it somewhat on the hourly time frame. If we just make it clean like that. Be very interesting now to see. I imagine it probably wants to come and spike up, but then if it starts building something to lose this level, then we're going to drop down, which makes most sense because we have bearish market structure and control. We're in a downtrend technically, and this would look like a lower high, especially if it then breaks like below this point, and then it should trend lower. But we'll see. We will see. So I would mark those levels and use them as your map. I'm trying to make this not too confusing. But we have here on H4 a big range, which even though it created this high, this was a fake high where the sell-off created the new low. So very bearish swing, and we're not even at the top of it yet. So I imagine it's probably going to want to do that. And now, yeah, we'll just look for, well, I'm going to be looking for a reversal at some point between $60 and $63. But then if it breaks that $63 level, I will say, right, we're probably looking bullish. Break 63 and then holds like 59 or whatever. That kind of pattern. Then I'll start saying, right, hyper's probably still bullish. So yeah, that's that. I'm going to have a bit of my water. I'm fasting, and what I was trying to say earlier was I went to have it thinking it was just water, but I put the what do you call them, the salts, rehydration salts, fasting salts into it, and it's a bit all salty and just kind of ugh. So I'm just gonna have some of that, and then I'll read the chat, and then we'll go to Q&A and chart requests. All right, so Regina says, do you believe in the 4-year cycle, especially the bottom around October to November? Thanks. Yeah, I still do believe in it. It's one of the main reasons why I sold all of my Bitcoin at 110K, because it was coming into cycle highs and then showing a lot of strength to the downside that we wanted to top. So once there was enough confirmation from different factors, I was happy to sell. I haven't seen that to the bullish side, and when I see that to the bullish side, I will go long and I will buy back in. But it's kind of one of those things, if you're able to time the top or kind of get an idea roughly what month it's going to be in and what year and what the signs are that it's reversing, like we had 1010, for example, and Bitcoin was a really obvious one, and kind of the catalyst for me to sell, because I think I sold like a week later on like the 16th. It came down and then it retraced back up, and I wanted to see like if that retrace holds and keeps pushing up, then this is gonna keep going. But it didn't. It failed, and it was around about October, so I knew like it was a good time to sell. I would say with regards to a bottom, I'll be looking for the same sort of signs around, well, anywhere really between now and, well, like the next 6 months essentially, maybe a little bit longer. We might end up ranging for a lot longer. If we get a new low, for example, if we drop down as I'm expecting and we move down towards 50K, we might just go sideways for the next 6 months, maybe 9, 12 months. We never really know. But in that time, I'll be happy to accumulate. And then once it starts breaking out of that accumulation zone, getting the idea that the bear market's over, it kind of lines up with bear markets being about 12 to 14 months or something like that. You kind of see, like, right, it's time to buy in. So I still see no reason why the bottom won't be around the same sort of mechanics as the top of the market in relation to a 4-year cycle. I was thinking about it just yesterday about how the next cycle top will look and then the next cycle bottom, and whether we might move up so much in the next bull market that we don't come back down to levels that we're seeing in the previous, we might not go below 125k again. So it makes these levels really interesting. But I think once we've moved up that much and the global interest in Bitcoin at the top of the next cycle, I'm at that point getting a little bit wary of, are we going to go make like a 70% correction this time? So that's when I'll start thinking at the end of the next cycle, right? Are the signs going to be the same, or are they going to be different this time? Everyone kind of expected it to be different in this cycle, but I feel like this was the floodgates opening to like all the richest people in the world coming into Bitcoin, but they want it to come lower first. And then the next cycle is kind of the one where it lines up with a lot of major institutional kind of plans and agendas, like the World Economic Forum's agenda goes till 2030, the New World Order agenda. It wouldn't surprise me if at that point Bitcoin is like an alternative currency and a lot of the biggest people in the world are involved in it, or owning major parts of the supply, and it becomes a lot more scarce. And then suddenly, like, we're actually not going to follow the 4-year cycle. So I think this bottom will align with the usual 4-year cycle. But the next cycle, I'm not so sure. But we'll see. But all we can do really is kind of have an idea in mind of when those cycles, tops and bottoms are, and then look for the right signs to get in or get out. Tate says, I'm a fan of it, the new layout. I like the lo-fi vibes. It feels like a good match to how you run us through stuff. Cool. Thank you. Regina, it's crazy because in every cycle, Bitcoin has hit the 6.786 Fibonacci retracement level in 2015, 2018, and 2022, but this time it's much higher. And our weekly RSI has been diverging for quite some time. I don't look at any of that stuff, to be honest. What do you think that suggests? That we're close to a low? I think we are close to a low, like we are. I just don't think it's here. It would look quite weird for it to be here, but if it does suddenly start breaking above 68k, holding it and looking to trend up, I'll say, right, this kind of then aligns with how a bottom looks, right? And to be honest, the way it's curving up, it looks quite nice. But it would kind of align with a bottom if it does, say, sometime September or late August, start breaking above 68k with a lot of strength. You might be going, yeah, this kind of is a sign to get in now, because we're getting, like, the last halving was earlier, the last top was earlier, the last bottom was earlier or something. So it might be we get an earlier bottom breakout to confirm everything. So everything's kind of lining up, but I wouldn't use it solely for my decision making alone. I still want to see the right price action, because it might burst up and then start retracing, looking to go again, but then failing, and then we end up dropping another 20%. So I want to make sure everything's like looking really good. We've either had confirmation of a new low, or we've had like a big high get broken after months of consolidation, and then it holds above that. So that's what I'd be wanting to do, basically. All right, we've got any comments on YouTube? No. Any chart requests or questions about anything to do with me or trading? In the meantime, I will tell you again that I'm now partnered with Blofin and moving I'm going to start trading the bull market on there as my CEX of choice, because they're non-KYC. You get up to 150x leverage. You can get up to $1,000 deposit bonus if you sign up using my link in the comments and description below. And then also Hyro Trader as well, crypto native prop firm, where you can get 10% off all challenge fees by using the code TraderMatt, and then also give you Discord access to help you through that challenge. And if you sign up to Blofin, let me know and I'll get you into my private Telegram where I do my daily market reviews, and trade plans will just be sent there. So you can get bite-sized versions of what I offer my subscribers for free by just signing up to Blofin and doing something like $50,000 of trading volume each month, which should be doable, which is doable. So yeah. Any questions? Otherwise, we'll move straight on to the next section. Can you look at near, please? Says Mr. Casper. Yes, I can. Let's see where we're at this week with it. Oops. So, I marked this really big low last time I was on stream, which is just kind of an obvious point, right? And it comes down, tests it again. And then what I've marked here are two things. So we had another big low where the buying essentially formed here to put in this high. And then it comes down and ranges at that point and then drops multiple times. But then it creates this range whilst it's looking to drop, similar to what we're doing in Bitcoin at the moment. And it comes down, ranges, and then drops again. So we know this is a key high, and we know this range high is a key high. And then what happens is that it comes out and takes that high with a lot of strength. And this is where the buying took place to come up and break it. That's where the decision was made to break it, right? So origin of the entire thing, rather than respecting from this point, or we were kind of at resistance here, respecting at that point the downtrend and continuing, it finds all this strength. But now it's coming back down to it. It's coming back down into that zone. So building a bit of a range now at this low. So I would say what you would probably look out for, maybe it spikes the demand and then reclaims a range and trends up. I'd be looking for that, or for it to break the demand and then using this level as a place to look to go short to send it even lower, maybe to back down to that low down there. I don't know really, but I would say it's coming into quite strong support. So you'd kind of favor any higher highs and higher lows to be a signal that it wants to come back up, probably to that range of about $2, that range high. So it's in building mode at the moment. I just don't know which way it's going to break out, but you'd favor longs at this point. The risk reward is better. What do you think about Circle, potential bottom or lower high? Circle USD. What's the ticker? Please. Does that help, Mr. Casper, with near? For me, it's a good area between $50, $60 is good for accumulation. What are you talking about? Sorry. Circle. CRCL. Circle Internet Group. Is this the one? It's a stock. I mean, it looks right at the bottom, right? Whoops. Difficult to kind of read it, but this was the first bottom that it made. And it's just deviating below, deviating above, deviating below. So good risk reward down here, I guess. I don't know anything about the company or what to expect, but it looks like, yeah, it's kind of rounding off. It might push up, I guess. I'm not really sure. The volume is quite low with it to really get much of a read. But in terms of, it looks quite strong here, but obviously the danger is it comes down, but it's at a key-ish low. So it might push up. I don't really know. Very difficult to kind of get much of an idea from that. But yeah, overall, it's at a low point, right? So if you're going to punt something on it, like, you'd rather do it there than chase a breakout and try it up here if it's something you believe in and are monitoring. Cool. All right. Let's move on to the next section, which is about breakout candles and trying to spot genuine ones. So I'm going to basically just use this time to show you a few examples. We're just going to go through the charts and then look at which ones I would take versus which ones I wouldn't. And essentially, again, all my trade criteria or trade entry criteria is seeing a range form a key area on the left. That might be another resistance point, or it might be an area of support. And then I just want to see it break in line with the trend, hold the range, and then push back up again as like a breakout of the second breakout of the range. Or I just want to see it do the opposite, maybe from that point or from that point there. Either fake the lows and do something like that, or fake the highs and then do something like that. That's all I kind of look out for. But the breakout candles, they differ, and what would be more constituted as an actual breakout versus a fake out would be just waiting for more price action, really. But there are usually some good signs if you're patient enough and you really are just able to ignore like your FOMO and be like, right, okay, I'm just gonna give it one more go, like one more like attempt. So at this high the other week, if you've got the pattern where you want it to go sideways and then you want to see a breakout, a retest, and then a breakout, how do you know which one it is? Because you have the initial range that has formed, and then when it comes back up, it rounds off, tests the low, and then puts in quite a big rejection, but ultimately ends up pushing back up to the range high. And then you have a series of very difficult candles to read, but technically telling you what the market wants to do. So it tries to break out to the upside and then wicks back into the range and then puts in two big red candles below the range. And then it starts wicking, comes back up, and then again wicks the high, and then with the breakout candle below, but it doesn't create new lows. And then again spends a lot of time pushing back up to the range high, and then you have another big break to the downside telling you that it wants to go. But again, it hasn't taken out any really key lows. And then it pushes right back up near to the top of the range and then puts in two big red candles and then finally goes. So there are multiple ways. This is difficult. This is quite a tough example, to be fair. But there are multiple ways that you can look at this. And I typically, if I'm looking for a reversal, give it like, I try to aim for two, but it's more like the third break. And then the third break would look like that's the first one, that's the second one, that's the third one. And that's like if you're using the last high before that breakout, you're going to be safe because obviously it chops all through there. And then you've got technically like a fourth breakout there and then a fifth breakout there, and then it goes. But you can read the signs. Sometimes this will go and then sometimes this will go, but in this case it didn't. But you can see, like, when the real volume steps in, you get much bigger candles versus when we're going sideways, the kind of small candles they are. And yeah, it does reject from the lows quite hard, but it doesn't really follow through. And normally what you'll see when you get a breakout of a range is like very big, strong candles like this, and usually a lot of wicks to the other side. But quite decisive price action where it kind of makes your juices flow when you see it and go, right, I need to get involved in this because this is clearly going to do it this time. That you might not, well, you definitely would probably get that vibe there. And I did, and I think that's actually where I shorted from. Or you're going to get multiple other little ones that kind of look like it, but you know, this one didn't really go anywhere. And it's only this one is probably the real one I would have taken if I'm sitting there on it, because you've got a lot of things in your favor. But again, you've got another low technically at this point. So the general rule of thumb really is if you are taking a breakout and you're waiting for that third one on a reversal, or in a continuation you're waiting for just a second, because it should really only need two if it's gonna trend. You want to use the last high or the last low before that second or third or fourth breakout as your stop loss to avoid this kind of chop. So if we now just basically look through a couple of examples of, and this was another good one actually, even though it didn't really go anywhere. We come down, we range here, and then we're at a low, right? So maybe we're getting a reversal. There are several pushes up, retests the low, and then pushes up again. So technically, would you have taken that? Well, I probably would have taken this candle if it closed above that high with a bit of a tighter stop, because in that situation, you know, you've got things have moved. But the same situation happens where, you know, if you're going to get that double breakout to the upside, maybe you get the trend up. You're kind of using the inverse of the rule. And then when you see that fail, you could either get in on that candle if you're on a best risk reward, or you can wait for the breakout to the downside. And then this case was technically a break, but you can see, like, with this wick, you don't really want to get involved. And then it rounds all the way off, takes that second confirmation, and then really that's when it should go. It's difficult to take these types of continuation trades when you've already trended quite a lot, because you get this kind of danger then that price is gonna do this really big drawn out fake out. So what you'd wait for now for your continuation is that attempt to push up again and then look to break it on a continuation to the downside. So again, it in hindsight, you've got really clean and obvious examples. Even though this trade didn't really work out, you could have got out break even by moving when it comes to like this point, because it tests the low. Tests the low as resistance and then creates a lower low. It should now be going, but it doesn't, and that's kind of where you'd look to protect yourself. But even again, like, you have this range here, which is kind of a little bit scrappy. Let's do on M15. This is technically the range, the low and then the high, like that, because you've got the trend up and you've got a higher high. So you're kind of sitting on that point there, right? And you're betting this is bottomed. So you're looking for a continuation here. So it breaks out. That's your first attempt. And then that's your double breakout. But you can see again, it doesn't create that high, wicks the high, comes right back down, and then pushes up. But again, wicks it, comes back down, and then you get the big momentum candle, which tells us we're going to trend up. Now, normally, like if we're in a higher time frame bullish trend, these candles are like big signals that we're going to keep trending up, and you can probably go a little bit tighter than the actual low there because you've got a bit of a wider entry as well. But you can see it's just going to go. If it's going to go, it's just going to go. You don't need in a continuation those third, fourth, fifth attempts, really. You'll get them, of course, but it's always ideal to look for that second one. Technically, that is the entry, but the way it wicked it, you'd probably be less likely to take it until the real strength showed up in that one. So in some cases, they don't come until outside of the level, and the risk reward is more difficult. But more often than not, they'll come from the other extreme, and then look to like this, and then look to break out. So this was a clean one as well. Again, if you're short biased at this point, because we've come up to a swing high, you can see how it behaves, where it trends up, comes into a previous high. Again, I'm just looking for ranges at these levels, and then looking for the price action to tell me what it wants to do. And then that is, at this point, just consolidate, try to go up, try to go down, push up, big wick. It should try to close as a higher high. And then the next candle is a big momentum to the downside. And then we get a follow through there with another candle. Technically, you can take that because we've got the information. We've basically retested this range. So you could read it as we've retested this range, and then we've got another, we've got 1, 2, 3 breakouts now. So you could look at it like that, but you just have to wait for what the market is undeniably saying to you, and that is we're in a downtrend, we're back at a previous high, we're going to try go for it, but then immediately get rejected with a big candle, and you wait for that lower low. So again, in hindsight, it looks really easy, and it's one of the things you have to kind of reframe your brain for with trading, is that when things are forming, you've got to kind of ask yourself, how is this going to look in hindsight? Like what do I want to see, where if I get to the computer and look at this chart in hindsight and say, that's where I should have entered. What's that look like? Now I'm just going to wait for that to appear and then take my trade. It's kind of how you have to do things. So there's a lot of patience, but in hindsight, this is a really obvious top, right? Now let's find signs where it looked like breaking out here, for example, takes the highs. Let's just do the most recent one. Builds a range. I mean, if we use the candle bodies just to make it a little bit cleaner. You can see comes up, first break, second break, and now third break, and then it comes back down and then pushes up with a lot of strength. Technically, that is a continuation pattern, right? Because we've held the low so many times, and now we're making yet another high, eventually rounds back off, and then you get the break here, first confirmation, and then the second confirmation, and you'd probably enter on that candle there. Why did this fail to break up? It's kind of a bit of a clue in the pattern, really, in the volume. First of all, we're still in a downtrend, and we've come up to a high. You'd probably favor, if you were looking for longs in this situation, a retest rather than looking for a continuation up here. You'd want to see it kind of come down to this point, and then maybe look for your continuation here, because your bias is at highs. We need to look for shorts because we're in a downtrend. So when you see these kind of staggered, sideways, jerky ranges very small candles, and then a big one out of nowhere. You can even see just in this pattern, if I just show you that line, would you say that's bullish price action and that's going to go on a big trend? Or would you say it's probably going to revert back to mean and come back down? Which is what it does. And especially if it's at a high, because then you know if it does lose the lows, as it does, then it's going to trend down. So it's kind of an art to it that is better crafted from just being super patient. But you'll be able to see something a little bit more organic even here, where we go sideways, but you can just see how it comes down, lots of low volume goes for it, and then starts building quite cleanly, whereas this was more that staggered thing. But just staring at these things over and over and over again, and being more patient and taking enough losses to realize that generally for a reversal you need 3 or 4 breakouts, but for a continuation it's more like 2 and sometimes 3. But that's kind of how I look at them. They're normally very strong candles, rather than like little pissy things here, and you have to wait for the close as well, of course. But even like at this high, you don't really want to see at the high things kind of going sideways with very small candles, because it's ultimately going to break through the other side, because that's a sign of weakness. So any questions on that? I'm gonna have a little bit more of my drink and then move on to the last subsection. It's getting late, so wouldn't mind ending this soon. Okay. Last section is about a trading schedule, and I kind of want to use it maybe as an example for something you can get inspiration from yourself. For those that have been tuning in for a while, and for those that watch the videos and stuff, you'll know that I've been having a trading transition more from a day trader to a swing trader as of about 6 months ago. And I've been trying to find my way with it, and found a little bit of difficulty because I'm not really too good at sitting in a trade for days and weeks on end, and I don't get immediate feedback. I end up holding trades which round trip, which I've been doing a lot since July, and getting a little bit sick of it, and have been kind of thinking, right, if I just give it another 6 months, maybe I'll figure out what's going wrong and how to do the best of it. And I kind of have it, like, I know what to do. It's just that I'm putting all my eggs in one basket with swing trading, that if I don't give something the opportunity to run, for example, then I might end up missing out on a really big move. And especially when I get in at like really key points, I might end up missing this move. So I want to just give it as many chances as possible to go, but we're in a market which is just very choppy and not moving. So I've been round tripping a lot, and then I've been doing the live trading for the subscribers. Last week I did my second session, and it was very much like, right, let's get to the charts when I know I've had I've had the morning to kind of assess what's happening, and I know when the volatility window and the volume is going to pick up. And then sometimes maybe after the news as well. But if I just pick out a little window each day where I know I've been watching the charts, and then if I just give it completely all of my focus, then like nothing else matters in that moment. At the end of the session, I'll close the trade, and then don't worry about it for the rest of the day. And I find that way more peaceful than holding on to something on a higher time frame and getting to like waking up in the morning being the first thing I check, rather than just like, right, I'm going to be trading 6 hours after I wake up, or 5 hours after I wake up. Don't need to worry about that first thing in the morning. I miss that, and I feel that's better for my lifestyle. And I feel, because I like to be active in the charts, I like to get that immediate feedback, as I said. I want to go into the charts and actually trade. I don't want to be sitting there waiting and waiting and waiting and waiting. Like in this chop, for example, maybe like 2 potential opportunities a month, or maybe just 2 potential opportunities a week. I want to get in and have multiple opportunities each week, maybe 1 a day. I'd say probably like 4 a week, or like 4 days a week where I'll get a trade if I'm day trading. And I want to get back to that, and I think that's what suits me best. Whereas obviously with other people's lifestyles, it might be suiting you better to be on a higher time frame. For me, sitting in front of the charts and actively trading is how I see what a trader should be doing, rather than being some sort of like mini investor. Basically, if you take a position on a like H4 chart and you can hold it for a couple of weeks, it's like a mini investment, and I find it hard to get that out of my brain. But if I'm taking day trades, then I feel like I'm in the zone. I'm right there with the charts. I don't need to think about anything in this time window. Nothing else needs to affect it. And then out of this window, I don't need to think about trading, because having a family, I might be sitting there on the sofa thinking about what's this chart like. An alert might go off, or what alert hasn't gone off. I'm like, what's fucking going on? And I'm sitting there like thinking about it rather than being present. So I think day trading is a really good way of just kind of getting in and out of the market, doing your thing, and then not having to think about it for the rest of the day, or maybe taking the day off if you don't actually feel like doing it. Whereas with a swing trade, you might feel a little bit more inclined to get involved that day, because you might miss out on a move that won't come around again for another week. So yeah, it's kind of leaning more towards that for me, and I'm realizing that the lower time frames definitely suit my personality better. But I need to figure out a way to uh, start doing it a little bit more disciplined. And I think doing a couple of streams a week is enjoyable as well. I really enjoy doing it. And I know people get more benefit out of that than me, so like coming on here and doing the chart analysis and running through that. Actively trading is way more interesting and educational, in my opinion. And the streams have been really educational as well. And getting a bunch of good feedback from that. So it's something I've got back into social media with the full intention of that being like the end goal, and I'm moving towards that now. So yeah, that's kind of what I've been thinking. I just need to get involved more with that. I found that a lot of the lessons I'd learned and problems with greed that I had with day trading are now showing up in my swing trading. I'm realizing why. Whereas I managed to curtail that with day trading, because I knew, right, this is my opportunity. I'm going to get in what I can get out of it today, and then I'll come back tomorrow. And I think a lot of trading, or a lot of problems that people have with trading, is a lack of confidence in getting the next opportunity and then executing that opportunity properly, and getting a win. Whereas once you have that belief and confidence in yourself that you can just show up to the market and you'll be able to find that next position, I when you get to the charts each day, you don't have to think, oh, I missed that opportunity, and like, oh fuck, I missed it, and I'm not going to get another one for ages, and do stupid shit. But when you can cut to the charts each day, and you know you can find an opportunity somehow, then it makes you feel a lot more confident in your trading, but also like waiting for the right opportunities as well. So I think I'm moving back towards that. Right, I'm going to look to wrap this up. Comball has asked, hello from Greece. Hello, mate. Whereabouts in Greece? 5 years ago, I was last there in Mykonos, and I miss it. I think it's probably one of my favorite places on earth, if not my favorite place that I've been to on earth, is Mykonos. So do I believe that ETH has bottomed? I believe that it's very close to a bottom. I'm not really looking for shorts around here, but I wouldn't be surprised to see it come down and test the lows again. Maybe even like fake the lows and then come back up, and then we have a bottom or something like that. But yeah, it's like very close to it. How do you define your ranges? Like, why so small? If you go onto my YouTube channel, which is in my link in my bio, Trader Matt with 3 T's. You'll find a video series called How to Build a Price Action Strategy for Beginners. You can also go on Kraken Crypto Exchange, their Kraken's YouTube channel, and see a 5-part series I made for drawing ranges. But essentially, the way I do it is I'll wait for a trend or an impulse, and then I'll wait for a pullback, and then a retest of where that pullback originated from, so the high of the trend. So once this has happened, so I have the low in like that. Once I get this, I can mark this as the high and this is the low. Once that previous high from where we retrace from is retested, and then I will just wait for price to range and then break out to the upside. Or the opposite way is, if we're in a downtrend, I'll wait for a retrace, and then I'll wait for that retrace low to get hit again. Doesn't have to break it. Sometimes it will. But then again, more often than not, I'll find it works. So that's kind of how I do it from the wick, sometimes the bodies, but the more in-depth videos on my YouTube channel and Kraken's YouTube channel. All right. Thank you very much for joining. Thank you very much for your questions. And I will be back on Wednesday with Cento Trades. He's coming on stream on Wednesday. I'm really looking forward to that because he seems to be a very good trader. But yeah, otherwise, as usual, next week I'll get my video up, and then we'll do a stream every Monday as usual. And yeah, have a good rest of the evening. Hope you've enjoyed this. Hope you learned something, and happy trading week for the rest of the week.